accountants, and I hope you all are doing great. I just hope you all have revised whatever content we had done in a previous class. So, moving forward today with audit of non-governmental organization, or you call NGOs like. So, first let me tell you what is the main motive of NGO. It works for the welfare of the people, general public. It works for the welfare of the public. Okay. For example, some of the common NGOs could be, you have heard of CRY, isn't it? CRY. That works for the orphans, isn't it? Then there is Pratham, that works for the education. Then Gunj. Gunj works for the disaster relief, isn't it? So all these NGOs, what do? They work for the welfare of the public. Okay. So we are going to study how should an auditor audit these NGOs. Okay. So starting with just giving you the brief of what kind of NGOs you must have heard of: CRY, Gunj, Pratham. Okay, the popular ones. So these are basically non-profit making organization. And how do they raise funds? From where do they get funds? They get funds from their members, donors, or contributors. Who are contributors? Who make contribution to the NGOs. Okay. Then from time to time they receive donation, isn't it? Then what is actually they do? They impart education, provide medical facility, assistance to the poor, disaster managing, like I told you, Gunj. Okay. So what happens is that NGO would include religious organization as well as welfare agencies. So these could be charitable organizations, hospitals, old age home, research foundations, etc. Now, these non-governmental organizations are generally, I said, generally incorporated as societies under the Societies Registration Act 1860 or as trust under the Indian Trust Act 1882. So, if they are the acts, then who will appoint the auditor under these societies and trust? The management of the society or the trust, isn't it? They are saying that it could be either in a form of society or trust. If it is society, the auditors are appointed by the management of the society, and if it is a trust, the auditor is appointed by the management of trust. Okay. It could also be incorporated as a company under Section 8. Section 8 company you all have studied in your law. Okay, that is registered under Companies Act 2013. So if it is governed by Companies Act 2013, who will be the electing members? Who will appoint the auditor? Members of the company, like case of auditors. In case of a company, the auditor is appointed by the members, isn't it? So likewise, if it is a Section 8 company, which is under Section Companies Act 2013, the auditor will be appointed by the members of the company. Okay? All right. Then, NGOs registered under Companies Act 2013 must maintain books of accounts under accrual basis. See, this para could come for your MCQ. Okay. If it is registered under Companies Act 2013, so it has to maintain its books of account as per accrual basis, like a company is expected to be. And which is the section that governs the maintenance of books of account? Section 128 of the Companies Act 2013. So under the same section, under section 128, this NGO is also required to maintain its books of accounts. And if the books are not maintained as per accrual basis, it would amount to a non-compliance of the provisions of the Companies Act 2013, because it was supposed to comply with that. If it is not complying, if it is not maintaining the books of accounts, it is not complying by section 128, then it is a non-compliance, isn't it? That would amount to non-compliance of the provisions of the Companies Act. And if the NGO is not registered under Companies Act, if it is not registered in the Companies Act, it is allowed to maintain books either on cash basis or accrual basis. Did you understand that? Simple. They say if it is registered as a company under company section 8 company under the Companies Act 2013 has to maintain its books of account as per accrual system, which is as per section 128 of the Companies Act 2013. However, if it is not registered in the Companies Act, this NGO is not registered in the Companies Act, it has the option of maintaining books of accounts either on accrual basis or on cash basis, whatever way it feels like. Is this much clear to all of you? Are you understanding the story of what NGO is like? Okay, the little basic of it is done. Now, there is one source of funds and one application of funds. Like we all know, sources from where you get money. Likewise, NGO has few sources, like I told you, donations, isn't it? Contribution, grants. So it could receive funds in such form. And where will it apply? It will apply to the expenses which is going to be made. Okay? Is it fine? Are you getting this story, dear students? Can we proceed? Okay, all right. So it says sources and application of fund. They say donations and grants. These NGO, they receive funds in the way of donation and grants in the nature of promoters contribution. In the nature of promoters contribution. Now this promoters contribution is for specific purpose. It is for specific purpose and hence it is in the nature of capital receipts and not revenue receipts. This promoter's contribution is for a specific purpose. It should be used for that very purpose for which it has been received. So we say it is a nature of capital receipt. And where is the capital shown? Under liability side in the balance sheet. So same way, this capital, this promoter's contribution will be shown as capital receipts under liabilities in the balance sheet of NGO. Okay. Now, this could either be in the form of corpus fund or contribution towards revolving fund. I said there are two funds, corpus fund and revolving fund. Now, revolving fund, as the name says, the fund keeps on revolving. What happens in revolving fund actually? What happens is that this NGO, it gives temporary loan to some another NGO. Okay, which then returns this loan plus interest to this NGO. And again, this NGO, it forwards loan to the other NGO. So this fund keep on revolving like that. Okay, they give a form of temporary loan and then it receives back the loan along with the interest. And again, it keeps on revolving. This cycle of giving loan, receiving back loan, giving loan, receiving back loan, this cycle keeps on revolving. So hence it is called revolving fund. Okay, but what is a corpus fund? The contribution made towards the capital or the corpus of an NGO, towards the capital, is known as the corpus fund. Okay, so what happens actually? They say that it states that income in a form of voluntary contributions like this should not be included in the computation of income. Whatever form of income you receive in the form of this contribution, it should not be forming part of your total income. Okay, this is what it says. It says that voluntary contributions made with a specific direction, that is the corpus, okay, made with a specific direction, that they shall form part of the corpus of the trust or institution and shall not be included in the computation of total income. It will not be included as income, it will be included as corpus, that is your capital. Okay, whereas the objective of contribution or grant towards a revolving fund is to rotate the amount, by giving temporary loans from the fund to another NGO or other beneficiaries for their project and then recover the loan so as to give temporary loan again and so on. Okay, then it says, however, the interest earned, any interest earned from beneficiary means any amount of interest that you are getting back along with the loan. Okay, they say it could either be added back to the fund, It could be either added back to the fund which you gave, loan plus interest. It could be accumulated and added back to the fund's amount, or it could be credited to the income and expenditure account. Are you understanding this? They say whatever interest you are getting, whatever interest you are earning from this temporary loan, okay, you could either add it back. This interest amount you can add to the fund's amount. Loan plus interest. So this interest you can add back to that fund amount, or you can either credit it to the income and expenditure. That is, you can treat it as your income. See, here it is giving you an option of this revolving fund to treat this as income. Okay, but their voluntary contribution, you cannot treat it as income. This could come in your MCQ. Okay, voluntary contribution, that promoter contribution, you cannot treat it as your income. It has to form part of the corpus. Is this clear to all of you? Please ask me any query if you have. Dear students, is this story clear to all of you? Okay, good. Clear. Very good. See, this is little complicated, but if you understand it once in a very simple language, you will remember once and for all. Okay, the only thing you have to do is, while I'm taking the class, pay attention, and after that, revise once. So it will be crystal clear and it will stay in your mind. Okay, all right. Then, what all other forms of fund they can have? They can have donation and grants received for the acquisition of specific fixed asset. Specific fixed, this is, for example, this building for education purpose. So it is for a specific fixed asset. Fixed asset here is the building. Okay, fixed asset here is the building. So that donation or grant has been received for acquisition of this particular specific asset, building for education purpose. Okay, grants whose primary condition is that an NGO accepting them should purchase or construct or otherwise acquire the asset for which grant is given. For example, this NGO is receiving grant or donation for building, for constructing a building or purchasing a building for education system. Its whole sole purpose is educating the poor. Okay, but it says no, I'm putting this money somewhere else. No. So this has to be kept in mind, that for whatever specific purpose the grant has been received to acquire the asset, either purchase or construct or build, it has to be used for that very purpose only. Okay. Then next, receive contribution, not for specific purpose, but for contribution in kind. Okay. For example, they get some kind of land or building. They are not getting grant. They are not getting money for it. They are just getting the building. In the first case, they were getting grant or donation for building or constructing or purchasing a building. But here they are saying, no, you take this building only. So it is contribution in form of kind, isn't it? So this building, some vehicle, some office equipment, okay, or any articles related to programs, projects such as food, books, building material, etc. So they are actually receiving that. In the first case, they were getting funds for purchasing. In the second case, they are actually getting that very asset. Okay, then they say this is all is the sources from where they get money. Now comes the application. Where are they going to apply this money? They are going to apply for establishment costs, for their office and administrative expenses, for maintenance, for charity, or for donation and contribution given also. Okay, so here they are receiving the fund. They are receiving the fund in what form? Promoters contribution, which could be this voluntary contribution will never form part of your total income. Okay, it is always forming part of the corpus, whereas this revolving fund is the amount that keeps on rotating. Now the interest portion of it you can either add back to the fund or you can credit it to your income and expenses account. Number one. Okay, then they say Donation or grants could be received for acquisition of specific assets, isn't it? Next, they say they could also receive contribution in kind, for example, building, land, vehicle, whatever. All these are sources. Applying for establishment cost, office administration expenses, maintenance cost, or also for donation and contribution. Is this much clear to all of you, dear students? Anyone, any doubt? Please ask. Is this much story for NGO clear to all of you? Okay, all clear. Good. Others? Okay, very good. Now coming to our core area, that is provisions relating to audit. Now, we say that if it is registered under Companies Act and working as Section 8 company, okay, then we that who will appoint the auditor? Okay, Companies Act 2013 or Foreign Contribution Regulation Act 2010, that we call it 61. All of these require that the accounts of NGO be audited and submitted to prescribed authority, and failure to do so could lead to forfeiture of certain exemptions and benefits. These NGO, if it is registered, they get certain exemptions and benefits. And if failure to do so, if they do not get their books of accounts audited, they might have to forego some of their exemptions or benefits. Okay, and special focus on the FCRA 2010 has prescribed the format and requires this furnished to who? Could come in your MCQ. To the Ministry of Home Affairs. To the Ministry of Home Affairs in a prescribed format. Okay, and it is required to be furnished to him within 60 days from the close of financial year. For example, your financial year 24-25 is ending on 31st March 25. Now, what is 60 days from the closure of that financial year? It is 30th May. So basically, it is 30th May each year. But how do you say it in a legal language? You say the FCRA prescribed a format. If it is registered in the FCRA, it has to get its books of accounts audited in a prescribed format. Okay, and it should be furnished to the Ministry of Home Affairs. Repeat with me. Ministry of Home Affairs. Within how many days? Within 60 days from the close of the financial year. That is by 30th May every year. Okay, so this was the provision relating to audit, where you have to keep in mind that if under 2013 Companies Act 2013 Act it is registered, the members will appoint, and if it is an FCRA, you have to get it submitted in a prescribed format to Ministry. So these three things you have to keep in mind here. Okay. Planning the audit, the auditor may concentrate on the following. This question, direct question, was asked in November 2023. November 23, direct question was asked while planning the audit. Means when you are planning the audit of NGO, it is important, dear students. Okay, the auditor may concentrate on which of the following aspects of NGO. You can even get in a form of a case study. You get a case study, and then as an auditor, what things would you keep in mind while planning the audit of NGO? Okay. Number one is very important. You have to keep in mind the knowledge of the NGO's work. What work is actually NGO doing? Is it imparting education? Is it taking care of the orphans? Is it for disaster recovery? What work basically the NGO is doing? What is its mission? What is its mission? Okay, area of operations. In what environment does it operate? What is the environment? Is it conducive for this NGO or not? Okay, then updating knowledge of relevant statutes. Which statutes did we study in the previous para? We have studied, it could be either statute means Under which act? Okay. Legal. What is legally binding? Is it the Companies Act 2013? Is it FCRA 2010? Or is it Income Tax Act 1961? Which statute is regarded to be considered there? Okay. Then you have to review the legal form of the organization. When I say legal form, what do you mean by legal form? What are its rules and regulations? What is it like? In company you have memorandum of association, you have article of association for your internal purpose. So this is what they are saying. You have to also see to the legal form of this NGO. Legal form of the organization means what is its memorandum, what is its article, what is its rules and regulations. Okay. Then you have to review the NGO's organizational chart, means who is taking what decision, what is the hierarchy like. Okay. We have to review the NGO's organization chart, financial and administrative manuals. Okay. Then the project and program guidelines, who is the funding agencies. Okay. Who takes decision, the budgetary policies, who is in charge of making those budgets. So basically we study the chart, the organization chart of NGO. Okay. Then very, very important point, this is point number 5, examination of minutes of the board. Now this minutes will come in many of the audit documentation of many of the organization or entities that we'll be going through. Okay. So very important document in this chapter is minutes of the meeting or minutes of the board. In later topics also you will see that the very first thing you have to know is, having the knowledge about the organization, you have to also study the minutes. Why do you think that minutes are so important? Because all the gossip and gupshup must have happened in the meeting. What are they trying to do next? What have they done? And what action are they planning to take? Or what corrective measures would be taken for things to be done? So all these things would have been discussed in the meeting. So auditor gets quite a sound knowledge and sound idea of what things are going on in the organization, what things are going on in the organization board, the minutes of the meeting, the minutes of the governing body. You know what minutes are? Whatever happened in the meeting you note down, isn't it? Okay. So examination of the minutes of the board. Then you have to also see the management and committees thereof to ascertain the impact of any decisions on the financial record. When we say financial record, it means the accounting records, the internal control system, because all these things would have been discussed in the meeting. And when you study the minutes, you will get to know what decision regarding this internal control system was taken. It must have been discussed in the meeting. Nothing in the organization could happen without calling a meeting for it. And whatever meeting was held, see, auditor was not present in the meeting. So he do not know what happened. Now, how can he get to know about it? By reading the minutes. Okay. So when he's reading the minutes, he's getting to know what decisions were taken regarding the accounting system, what decisions were taken regarding the internal control system of the NGO. So minutes is a very important document. Okay. Next, they say they study the accounting system. What accounting system are they following? Okay. Tell me, if it is registered under the Companies Act, what basis of accounting are they going to follow? If it is registered under the Company Act, let me see. Very good, Khushi. Accrual. Okay. And if it is not registered as company, it could either follow accrual or cash basis. Very good. Means you are paying at what procedures are they following? What is the internal control? Who's governing what job? Okay. Then internal checks. Internal checks. The work of one is checked by the other. Is it? The internal check existing for the NGO and verifying its applicability. Is the internal control only for the namesake, or is it actually maintaining that internal control system? Okay, you all have studied the design, implementation, and maintenance of internal control, isn't it? So designing, implementing, and also maintaining that internal control. So all these things need to be verified. Then, setting of materiality levels for the audit procedures. Where did you study this in essay? 320. Likewise, materiality levels for the audit procedures. For example, small NGO, small materiality, big NGO, big materiality. The benchmark will decide that. Okay. Then, the nature and timing of reports or other communication. It is a smaller organization. It is not that every time you go and meet the committee or TCWG and communicate things. No, no. Once you go and you discuss things. But yes, if there are too many things or too many misstatements coming across your way, the timing of your communication will increase. Every time you're telling the management, please do this. TCW management is not listening. Okay. So SA 260 likewise. Then the involvement of experts and the reports. Suppose NGO is working for a disaster recovery. Huh? So what will you do not have any idea as a chartered accountant, as an auditor. You do not know what kind of measures can be taken or how things can be measured. So you will seek an expert's advice. So then involvement of the experts as per SA 620. Reviewing previous year's audit report. These are the procedures that you will follow. Okay. So let's do it once again. First, the knowledge. Hmm? First, the KYC. Knowledge. Know your client, know your organizations, know your NGO. So, knowledge of NGO. Then, under which statute is functioning? Companies Act, FCRA, income. What is the statute that's governing? Okay. Then its legal form and also its memorandum and article. Then what? The organizational chart. Then the minutes, very important, minutes. Then comes the accounting system procedures and the internal control. After this, see all the accounting concepts coming. Now comes your essay series. Materiality, nature and timing of reporting and other communication, involvement of experts, and your previous year's audit reports. Okay, so out of these 10, if any 6 to 7 you try to just remember and write in your exam, it will be sufficient. Is it clear? But obviously, you should be knowing all the 10 points because you never know which point comes in a form of MCQ. Okay? But for your descriptive answer, 5 to 6 or 7 pointers will be enough. Is it clear to everyone? Dear students, is it clear? Can we proceed? I'm not getting any response. Is it clear? Okay, all right. Good. Now, coming to the audit program. Planning the audit. Now we have planned. Okay. Now what are we going to do? We are going to actually execute the program. Okay. So what should all be included in that program? The sequential order. You have to check the assets. You have to see to the liabilities, the income and expenditure. This is what you see your PL and balance sheet, assets, liabilities, purpose fund. Okay, you're coming to the liability side, capital fund, isn't it? So they say while checking this corpus fund which you got for a specific purpose, okay, now in this chapter you have to now start treating yourself as the auditor, going to the NGO, checking various aspects. Okay, if you are going to the corpus fund, okay, you tell me, the NGO has received a fund for a specific purpose. What thing will the auditor check? What thing will an auditor check? Come on. Any guesses? You have to use, see, you will get to know everything. But if you use your brains, it will be easy for you to check the expenses and utilize. Yes, is that utilized for that purpose only? Very good, Vedant. Very good. Very good, very good. So at least you are getting a knack of it now. Okay, that yes, okay. See, The person, the donor who must have given these funds should have written a reference to that purpose in the letter. Okay, so they say that the grant received towards corpus should be vouched with special reference to the letter from the donor. Donor, the one who is donating. Letter from the donor. He must have written that this fund should be used for this purpose. How would the auditor know? Auditor will ask, sir, which fund, why did you receive these funds? They say for this purpose. Now, is he telling you the truth or not? How will you get to know? How will you verify it? With a document. And what will be that document? It is a letter from the donor. You are getting a letter, sir, please use these funds for building a building for education purpose. Okay, sir. So letter from the donor. Okay. So you will verify the letter from the donor. Interest income should be checked with investment register. Okay. Now, if any interest coming out of that should be checked with the investment. Again, this investment register is again an important document in this chapter. If you want, you can just write down some important documents from this chapter. Like I told you, minutes of the meeting. Important document. Another important document is investment register. Interest received, you will check from the investment. See, I'm telling you little tricks to remember the documentation when it comes to audit of certain documentation. So just note it down somewhere in your post-its or whatever, wherever you feel like, if you're carrying your study material. Minutes of the meeting, minutes of the board. Number one, very important document. Second document is investment register, because there you get to know the accounting treatment of the fund. How is it dealt with? Okay. And also physical investment in hand. If it has used that fund for that particular purpose, does it hold any physical investment? Okay. So number one, clear. Corpus fund. Vouch for the letter from the donor, whether it is, even if you write, is it used for that specific purpose, it is correct. But if you use this word letter from the donor, it is better. Okay, letter from the donor that it is used for the specific purpose, all correct. Okay, then when it comes to interest income, you check for the investment register. Okay, wherever interest income come, what is the verifying document? Investment register. Write it somewhere. Interest income dash investment register is the verifying document. Okay, and physical investment in hand. Next, after capital, what do you have? See, corpus fund, remember as capital fund. After capital, what comes in the liability? The reserves. This is how you can remember the chronology of it. Okay, reserves. Now, in reserves, again, seek for the donor's letter. You will read for the board's resolution, that how this reserve was to be utilized. You will check for the transfer of gross value of assets sold. Is it transferred to reserve? Capital reserve, general reserve, any adjustment made from capital to general reserve. What is happening? So again, the two things you will vouch for is the donor's letter and board's resolution. See, these two terms are repeating again. Okay, so reserves, capital, reserves. Then earmarked fund. What do you mean by earmarked fund? Earmarked funds are funds again which is to be used for specific goal. Okay, they say earmark refers to fund allocation practice in which the entity or a government or individual set aside predetermined amount use of funds for a specific goal. Now again you have to check the requirement of donors institution, board resolution. Okay, so are you getting these terms getting repeated again and again? Okay, then comes project or agency balances. What is this? This is basically any balance from the agency. You have to vouch for the disbursement. How are you going to disburse this amount? How are you going to spend this amount as per the agreement with the donor? The donor said money used for the construction of building. So again, you have to see to the agreement with the donor. Okay, and expenditure as per agreement with donor for each of the balances. This balance is for this purpose. This balance is for this purpose. Okay, again, you have to see to the agreement with the donor. Are you getting this? seeing this term coming again and again, letter of donor, letter from donor, agreement with donor. Okay. Students, are you understanding? Okay. Next come your loans. Your loans. Now for loan, what will you vouch? The loan agreement. What will you vouch? The loan agreement. Counterfoil of receipt issued. You get a receipt and you get a counterfoil as a duplicate copy of it. So these are the two things you have to vouch in case of loan. Okay. Then comes your asset side. Liability is over. Okay. Now come your assets, your fixed assets. Okay. Now you tell me. For fixed assets, what will you check? Disposed during the year, isn't it? Depreciation for that asset, is it put in correctly or not? Authorization of the same, is it authorized properly or not? Donor's letter, if it is received in kind, if the donor has given a building in kind, then also donor's letter, because he must have written this building to be used for this purpose. Donor's letter, agreement for in case of grants, and in case of immovable property, what else will you check? You will check for the title deeds. Can you relate this topic with whatever you have done in the items of financial statement? Come on, tell me, dear students. Can you relate this? Can you relate this with the items of balance sheet, vouching, verification, whatever you have done? See, this is the beauty of this subject. It goes in such a sequential format that builds a chain for you to understand the other chapter. Had it been you have not done items of financial statement, then what would happen? All these, whatever I'm talking, would appear to be a Greek clue, isn't it? So, very easy. For fixed asset, acquisition, sale, depreciation, authorization, donor's letter if it in case of some grant in kind, isn't it? And also for the immovable property, you will see for the title deeds. Easy? Is it easy, dear students? Is it easy? Come on, tell me. Yes, very easy. Now, if you have done, see, even if that chapter is not very crystal clear to you, or you do not remember it that well, you will be able to relate things. For vouching verification, what documents to check? Okay. All right. Then, after fixed assets come your investments. After fixed assets come your investment. Okay, now you tell me, investment to be checked with investment register. Investment to be checked with investment register. And also some physical investment if held in has to be checked for. Again, for these you will check the title deeds, the valuation of these investments, whether it is in the safe custody or not. Okay, so verify further investment and investments for approval by appropriate authority, authorization, and reference in the bank account for principal amount and interest. If any investment is there, your bank account would reflect that, isn't it? That an interest has been received or money towards principal. If it's a big amount, you would say it is principal. A lesser amount with regard to some percentage or the same, it would be interest. Okay. So investment register. I told you it's an important document, investment register. Next comes cash in hand. How will you verify cash in hand? Physical verification. You count the cash. What do? You count the cash. Physical verification of cash in hand and impress balance. What do you mean by impress balance? That is given for day-to-day expenses, the petty cash, isn't it? At the close of the year, and whether it tallies with the books of account or not. In your next chapter, when you are doing your audit of bank, even there you have this cash verification. You say, okay, on 31st March, you had this much cash. Okay, let me see your books of accounts. Okay, fine. Today, what cash do you have? Let me check. You're physically verifying the cash, and at the close of that day, you check it with the register whether the same amount of cash is mentioned there or not. Cash in hand. Is it clear, dear students? Next comes the bank balance. How do you check the bank balance? Check the bank reconciliation statement, the BRS, and ascertain the details of outstanding, old, and unadjusted amount. When you're preparing the BRS, you will get to know which accounts have been adjusted or not, isn't it? Then for inventory, what will you do? You will verify the inventory in hand, physical verification, and also obtain certificate from the management for the quantities and valuation of the same. You will acquire for the written representation. You will ask for the representation. Okay, according to you, inventory is this. So that is a certificate, and you are also verifying it physically, isn't it? Okay. Next is your program and project. Now that asset and liability over, now income and expenditure. So for expenditure, you have program and project expenses. Whatever programs or projects you have to spend for, you will put your expenses there. So you verify the agreement with the donor. For what purpose has donor given you money? Donor has given you money for maintenance or repair of some asset. Okay, that this is to be dealt herein. Okay, then you have to again see to the agreement with the donor. Okay, then in case of programs or projects involving contracts, you have to ensure that TDS is deducted. Okay, under what section do you deduct TDS? What is the section in your Income Tax Act for your TDS? Can we get an answer to it? Your section 194C, isn't it? Where the contractor, because that involves contracts, isn't it? Okay, all right. So these were your expenses. Okay. Now comes your income or receipts. Okay, is this much clear to everyone? The asset and liabilities. Dear students, is this much clear to everyone? Okay, all right. Very good. So let us proceed to the income now, the receipts of NGO. Okay, all right. So the receipts could be in the form of contribution and grants for the projects of program, isn't it? Some contribution or grants. What will you check? You will check the agreement with the donor and grant letters. Agreement with the donor or letter from the donor. Okay? Okay. Next, receipts from fundraising program. It organized some kind of concerts or some kind of show to raise programs, isn't it? You must have heard of some shows running just to collect money for a specific cause. Okay, so that way, some concerts or show. Then what you have to verify in detail, the internal control system, and to ascertain who are the person responsible for collection of funds and the mode of receipts. How are they receiving? Are they receiving it in cash? Okay, are they receiving, which mode of payment are they receiving? All right, next, membership fee and subscription fee. There are two kind of fees, membership and subscription. What do you mean by membership? For some NGOs, the members, they give a membership fee. So that membership fee, are you able to recall your non-profit organization accounts that you did in your accounts? Are you able to recollect few terminologies from there? So what will you check? You will check for the fees received from members with the membership register. Membership fee from membership register. And you have to make sure that what kind of a membership is it? Is it just the entrance fees? When you enter, you pay that fee? Or is it an annual renewal fee? Every time annually you have to pay that? Or is it a life membership fee? You have taken it for your lifetime. Okay, and you have to reconcile the fees received with the fees received during the year. You could either receive some kind of advance. Okay, annual membership fee you're receiving it today, it is advance. Life membership fee you're receiving it today, it is advance. So for that portion which pertains to this very year, you have to check that, and you will check it also with the membership register. Okay, subscription fee. You subscribe to some kinds of newsletter or magazines of that NGO. So you have to check for the subscription with the subscription register. Membership fee membership register, subscription fee with subscription register. Okay, and receipts issue for that. You reconcile the subscription receipt, okay, and then you also check for the receipts with subscription rate schedule. There's a subscription rate. For example, for your entrance fee, this is the rate. For your lifetime membership, this is the rate. For your annual membership, this is the rate. So you reconcile with that also. Is it clear to all? Okay. Now you tell me this interest and dividend, from where will you check? You will check with the investment register, investment records, isn't it? If the NGO has received any kind of interest or dividends, okay, for any investment will be checked with the investment records or investment register. Is this clear to all of you, dear students? Is this much clear to all of you? I'm waiting for your response. Okay. See, there could be a question coming in your exam regarding receipts of donation. How will you audit the receipts of donation? Now, ma'am, we have studied about donation, but if specific question on receipt of donation, ma'am, what will be right? Okay, this question has been asked once in MTP. So there, use your common sense. You can write for your internal control system. You will see the internal control system. You will see the custody of the receipt books. Who owns the custody of those receipt books? Is the payment received in check? So receipt of check. Cash receipts. Bank reconciliation system, and also foreign contribution regulation acts. Okay, so all these acts you have to check. Huh? Under foreign contribution regulation act, you will check the foreign contribution receipts, isn't it? So what did I say? You will check for the internal control. You will check for the custody of receipt books, receipts of check, receipts of cash, BRS, and foreign contribution. Okay, then again they could ask a question, how will you check for the remittance of donation? This was the receipt of donation, remittance of donation. So you will say, what was the mode of sending the remittance? What was the mode of sending the remittance? First of all, you have to see that when the NGO is disbursing, it's giving donation, is it selecting the NGO actually requiring the donation, or is it just spending for benefit of certain members of it? Are you understanding this point or not? Okay. First they say there should be unbiased selection of NGO for giving donation. The NGO should be unbiased while it is granting. They say maybe to its member it is granting and saying we are giving it for a purpose. No. It should be unbiased in the selection system of remitting donation. Huh? Then what is the mode of sending the remittance? Then you confirm it with the confirming receipt. You get a receipt for remittance. Okay. Then you identify the verification. You check the registration, whether registration under 80G is there or not. Okay. Then direct confirmation. You see, no, you then do a direct confirmation. You see whether the donation is utilized for that purpose or not. So these are some general answers that you can give if you have understood this NGO part. Okay, so this was once asked, but you can use your general knowledge or your general whatever you have studied here. Based on this, you can write your answers. I'm mentioning this because if any time this kind of question comes, you should be ready with some points in your hands. Okay, and if you have understood the program, the planning, what will you check, so you will be able to write that. Okay, all right. Okay, any doubt in NGO? Anyone? Is NGO clear to all of you? Okay, all right. Now coming to our next topic, that is audit of sole trader. Who is a sole trader or sole proprietor? A single person who's doing business. is, and he does not have any partner. He is a single person individual doing a trading. Okay. So you say, is he obliged to, or is he compulsory to undergo an audit? They say it is usually under no legal obligation. Why, ma'am, a sole trader want his books of accounts to be audited? See, a sole trader may be requiring some kind of funds for his business. It could be term loan, it could be a working capital. You understand the difference between the two? Term loan is for a specific purpose, or when for your term, a bigger duration, you want to expand your business, or you want to build another business. Okay, you want to take another shop, you want to purchase some kind of land and building, you get, for which you prepare your project report. Okay, that is a term loan. Next is your working capital, that a business take for it day-to-day working, day-to-day function of the business. It wants to purchase the raw material, okay, or some, if it is into a retailer, the finished goods, and then sell it. So more, they say, I don't have money to buy product, how will I sell and earn? What will I sell? What will I earn? So, dear bank, please give me some loan for my day-to-day expenses. That is your working capital loan. You take loan to buy your stock. Okay. So, here they say ki there is no under legal obligation for the sole trader. But yes, if he wants some kind of assistance from a financial institution in the form of loan, what will the bank give like that? No. The bank will see to the projections. The bank will see whether the books of accounts are audited or not. Here lies the catch, that if it is audited, the bank will analyze how much loan can the bank grant. How much is there a repaying capacity of the person to repay the loan or not? So all these things matter. That is why, and also few traders think that okay, I don't want loan, I'm self-sufficient. But yes, for my correct accounting, my correct presentation, is my books of accounts representing true and fair view, I will get it audited voluntarily. No issues. Please get it audited. Okay. So they say there is, it is, he's not obligated, he's under no legal obligation to get his books account. However, if they want to get some kind of financial aid, like, however, many such individuals get their financial states audited due to some regulatory requirement, such as inventory brokers on a specific instruction of the bank, or for approval of loan. Okay, for few it is mandatory, others they seek it for the purpose of obtaining loan. Now, okay, you tell me, in case of company, the members appointed the auditor. Who in case of sole proprietor or sole trader will appoint the auditor? Come on, give me the answer. Who will appoint? Who will appoint the auditor in case of a sole trader or sole proprietor? He himself, the sole proprietor. Very good. So, see, appointment of auditor. Auditor of the sole proprietary concern shall be appointed by the sole proprietor himself. In case of change of auditor, it would be the duty of the incoming auditor to communicate with the previous auditor. See, you must have heard of NOC. You must have heard of previous communication with the auditor. Why? Because before accepting the audit, it is not that you have accepted today and then you are communicating. No. Before accepting the audit, you have to seek permission, or you just communicate to the previous auditor that, sir, I have been appointed as the new auditor in your place. Please tell me, is there any reason for me to not accept this audit? Maybe they have not given the previous auditor fee and they have removed him. So he will be in a position to tell you, no, no, they don't pay at all. They don't pay, so please don't be the auditor. Okay? Or there some fraud has happened and I was the one to pinpoint the fraud, and that is why they have removed me. So you ask, you communicate with the previous auditor that, sir, is there any harm, or is it right for me to take this assignment? Because we as CA, we are peers and we have that brotherhood feeling among us. Okay, we take, or we communicate with the previous auditor and tell him that this is the case. Is there any reason that you tell me that I should not accept? The previous auditor say, no, they haven't paid money. No, there was a fraud in the company. or it could be a reason. Oh, please continue. I left because I had too much of professional work with me. I was occupied with my other work. I couldn't pay attention to their accounts, or I did not have time to take their assignment anymore. Are you understanding? So it is not always that something bad had happened. It could be for a casual reason also. Okay, all right. So it is the duty of the incoming auditor to communicate with the previous auditor. And as such, the sole proprietor can determine the scope of audit as well. Means sole proprietor can tell the auditor that auditor, please carry out audit of this part of the account, because they say voluntary, if he's doing those little part of accounts, he say that please carry audit. See, it is written there. He can stipulate that only a partial audit can be carried out, that certain parts of the account shall be not be checked, and that the auditor shall also prepare the final statement of the account. So small he says, sir, please you see whether I have prepared it as per the relevant accounting standard and schedule 3 or not. So please guide me. He can guide. Okay. He can also decide whether the audit shall be carried out continuously or at the end of the year. So say once at the end of the year, annual statutory audit is okay. They say no. Interim audit I have to take because your business is big. So depending upon the mutual understanding of the sole proprietor and the auditor, this engagement could be carried forward. Okay, suppose the sole proprietor says this, sir, this figure of debtor I'm unable to finalize, or I'm unable to ascertain. Please help me out in getting this figure. He say, okay, I will see to your accounts. I will ask for the external confirmation, and we can come to a appropriate figure for debtor. So likewise, sir, I want only inventory audit to be done. Just check my inventory. I want only revenue audit to be done. Just check my revenue. So these things can be customized. Okay, all right. So on these considerations, it is desirable that the contract of appointment of auditors in such a case should be in writing. Also, it should clearly define the scope of work which the auditor is expected to carry out. This is in your engagement letter, SA 210. Isn't it? You tell two parties, the sole trader and the auditor, they come to one conclusion that yes, these are the things need to be audited, and it is written in a paper format, in a written format, in the form of engagement letter, defining the scope. What is the scope? Okay, all right. While doing so, he should also state the limitation, if any, placed upon his work to obtain the client's confirmation. If the auditor thinks that is a limitation, he will also mention the same. Now they say the advantages of this sole trading audit of sole trader could be related with that of the audit of the firm, which we will do later. So only this much small portion for your sole proprietor is mentioned in the study material that you need to keep in mind. Is it okay to everyone? Is sole trader understood? Easy? It was easy, isn't it? Nisha Ray saying in Hindi, what do you mean by in Hindi? Nisha, what do you mean by in Hindi? Do you want any statement to be repeated to you in Hindi? Nisha Ray? Okay. So can we come to audit of firm now? So what did we do? We have done NGO today. We have done sole trader today. Now coming to audit of firm, isn't it? Okay. When we say firm, we talk of a partnership firm. Partnership firm. Whenever a term firm comes to you, it means partnership firm. Okay. So, okay, you tell me, if in case of company it is appointed by the members, if in case of sole trader it is appointed by sole trader himself, in case of partnership firm, the auditor will be appointed by the partners. Okay. Either on the basis of decision taken by them or to comply with condition in the partnership agreement, whatever is there in the agreement, because you all know in case of partnership agreement, the agreement supersede. Okay. His remuneration is also fixed by the partner. Okay. And then in case of change of auditor, it would again be the duty of the incoming auditor to communicate with the previous auditor. Okay, now the auditor may particularly ensure application of accounting standards. Whether this partnership firm have they maintained their books of accounts as per the standards or not. Okay, as per accounting standards. So he has to see. And in case the firm is getting its accounts audited under the requirement of any statute, okay, then the auditor will have to qualify the report in case of non-compliance with the accounting standard. Suppose the partnership firm has to get its books of accounts audited, okay, and then they have not followed accounting standard. So while reporting, you have now studied about the type of report, qualified report, isn't it? Disclaimer, adverse. So he has to qualify the report. In case of non-compliance with accounting standard, alternatively, they say only disclosure for non-compliance with accounting standards would be sufficient without making it a subject matter of qualification. Means, what does this line means? Without giving an adverse report. Okay, he can only qualify with respect to non-disclosure of or non-compliance with the accounting standard. You disclose the fact that there is a non-compliance with accounting standard, that is okay. Okay, without qualifying the entire report. Is it okay to all of you? Is it okay? So what did you understand by this? That if a partnership firm is getting its books of account audited, it has to maintain its accounts as per accounting standards. And if not, then the auditor can qualify with regard to the non-compliance with the accounting standards. Okay? Is it clear, dear students? Can we proceed? Because now what we are going to do is the major chunk of this partnership. Please give me your consent to proceed. Only if you permit will I proceed. All right. Okay. So now coming to matters to be considered before starting the audit. What do you mean by before starting the audit? In your agreement. When you are deciding the terms. Okay. Then what are the matters to be considered before starting? Okay. They say before starting the audit, he should examine the partnership agreement and note the provisions there in regard to following matter. He will study the partnership deed. Okay, the partnership deed he will study. And what things will he see in that? Firstly, the name of the business, the style in which it is conducted, means what kind of business. If it is a partnership firm, what is the name? Is it using a appropriate name and associates? Okay, what kind of name is it using? What kind of style is it working? What is a business? Is it a retail garment outlet? Is it a retail footwear outlet? What is that they are operating? Okay, then the duration of partnership as agreed upon by the partners in the partnership deed. Okay, then the amount of capital contributed by each partner. Suppose there are two partners, A and B. How much has A contributed? How much has B contributed? Now, to best know this or study this, get back to your partnership accounts of accounts. Partnership accounts, can you get back to it? What were the things that you used to see? Capital contribution, profit sharing ratio, isn't it? You had to see to this. What is the interest that the partners are getting? What salary remuneration the partners are getting? Remember the capital account of the partners. Students, please go back to your accounts. Okay. So what did I say? Name and style under which the business is conducted. Okay. Then the duration. Then how much capital is contributed by each partner. Now, what is the profit sharing ratio between the partners? Isn't it? On what ratio? If there are two, are they sharing it 50-50 or are they sharing it 60-40? What is the ratio? Okay. Then the provisions and regards maintenance of books of accounts. What are the provisions regarding the books of accounts? Means what is the accounting provision that they are following? Okay. For example, what are the reserves, what are the provision for depreciation, okay, and also the period within which the accounts can be reopened for correcting a manifest error. If there is an error, under what circumstances can they be corrected? Okay. Then borrowing capacity means how much can each partner borrow. Okay. How much can each partner borrow? Then the rate of interest. Okay. What is the rate of interest to be allowed on the capitals or loans provided by the partners? What is the rate of interest? If it is in case of partner capital contributed, what is the rate? Loan given, what is the rate? Okay. Then the compensation. What are the salary? What are the, the section 194T of your Income Tax Act, where you have to deduct TDS to the given on the remuneration given to the partners, isn't it? So if you're giving salary, if you're giving interest, so what is that the compensation each partner is getting? Okay, so the salary that are payable to the partner, what withdrawals are permitted against the shares of profit, and to what extent? Okay, then management. The duties of the partners as regard the management of the business. Which partner is regarded to see to what business? Okay, which partner is managing what business of the firm? Okay, then the bank operation. Who is operating the bank accounts of the firm? Suppose there are two partners, A and B. Okay, one of the partner is the signing authority, or one of them is operating the bank account. Okay, so this all thing you have to see to. And also the limitation and restrictions, the rights and powers of the partners, where will all be mentioned in the partnership agreement. Okay, are you understanding what restrictions are imposed on each partner and what are their rights? So what did we do? Matters to be considered before starting the audit. Business, the name and style of the business conduct, duration, capital contribution, profit sharing ratio, accounting provision, borrowing capacity, interest rate, compensation, management, bank operation, restrictions and rights. So out of these 11, if you remember 6, 7 to 8, it is good enough. Okay? But obviously, yes, you should be knowing each and every point because it could be asked, you know how. All right? Is this much clear to all of you, dear students? Okay. All right. Very good. Then, coming to advantages of partnership firm. And remember, the same advantages lie with the, the sole trader. Few of them, obviously, there would be no dispute because a single person. So you have to pick and choose according for the needs. Okay. So advantage. What are the advantages of getting the books of accounts audited in case of partnership firm? First of all, it is reliable. If the books are audited, signed by a CA, any accounts would be more reliable, isn't it? More reliable. If the partnership firm wishes to obtain loan, and if they show this audited accounts to them, they will rely that yes, the accounts are true and fair. Okay. Then, if some other firm wishes to acquire this firm, he will see, okay, the balance sheet has been audited. So the figures coming here is good enough. He wished to calculate the goodwill of this firm. Goodwill, calculation of goodwill, you remember? So it will be easy for him to calculate the goodwill in case of this audited balance sheet. Okay. So number one, it is reliable in case of obtaining loan or for acquisitions by the other person. Okay. Then dispute mitigation. Obviously, if there is any dispute between the partners, okay, then possibility of occurrence of dispute among them is mitigated if it is audited. How come, ma'am? Because you have decided the terms, okay, and then you can settle the accounts between the partners. Okay, you can settle the accounts between the partners. So they say it helps in mitigating the dispute. Then in case, and where will this dispute arise? This dispute will arise only when some partner is coming in or going out? When do you fight? When do you fight? When your cousins come or when they go? You fight with your mama, you gave this to him and not to me. So when does dispute occur? In case of either admission or retirement. Remember it that way. Okay. It helps in mitigating the dispute. And when will the dispute occur? Another 2 points coming up. In case of admission or retirement. So admission or retirement is the point of here. You see admission. Audited statements of accounts can be helpful in negotiation to admit a partner. When some other partner is trying to be admitted in your firm and he says, oh, why will he be interested in coming to your firm? Your profits are high. Okay, your business is really good. How will he get to know this? If the accounts are audited, he can be reliable. Oh, yes, such figure is authenticated or you're approved by a CA. I can rely on the same and I can get admitted to this good firm. Okay, then dissolution. Dissolution is nothing but when there is a retirement or death or settlement between the partners. So again, these audited statements, why? Because on those PSR, on those capital contribution, on the disbursement, the auditor has signed, he has approved that yes, all these are dealt with as per the provisions. Okay, then control. What do you mean by control? What do you mean by control? They say, suppose they are partners. Some of them are working partners, some of them are non-working partners. Okay. Now, they try to act as a control, to control the exploitation of non-working partner by a working partner. See, working partner will say, obviously, non-working partner gets a little lesser share generally. Okay. But then the working partner will say, oh, I've earned so much and you never even showed up to the firm, so I'm not going to pay you this amount. Now he will see how much has he earned. How will he get to know? Through the audited statements, through the audited financial statements. Okay, so this non-working partner, he's saying, oh, you have earned this much, so give me my share. Are you understanding? So all these things are helpful when your books of accounts are, your partnership firm is audited. Number one, reliable. Number two, in settling disputes. When will the dispute occur? In case of admission or dissolution. And to control the exploitation of non-working partner by a working partner. Are all the 5 points clear to all of you? Come on, it is important question and can come. It was there in RTP November 23. Come on, points should be on your fingertips. Reliable, dispute occurring, admission and dissolution. And one more, that is a control exploitation of the non-working partners against the working partners. Come on, did you learn with me? Tell me. Did you learn with me? See, if you learn with me in the class, you will have less work to do later. Did you learn with me? Come on, who will tell me all the points? Who will tell me all the points? Advantages of audit of a partnership firm. Come on, tell me all the points. Who will tell me? Write to me in the chat box. Quickly. Let me see who's the first one to write. See, I'm making it easy for you so that you learn. You are able to learn the content. You are able to understand the content. Come on, write to me. Benefits, advantages. Let me see who writes to me. So all of you are able to learn the points. Very good. Now, coming to the next topic, that is matters which should be given special consideration in the audit of accounts of a partnership firm. Now, you tell me, if you are going as an auditor to a firm, what will be the first thing that you will see to? The letter of appointment, your engagement letter. What will it do? It will define the scope of audit, how much audit you have to do. And this should have been signed by the partners, isn't it? When you write the engagement letter, okay, then what do? You get it signed by both the parties. That is the auditor, that I am engaged to do this work, and it is acknowledged by the appointing authority, that is the partners in this case. So acknowledged by the partners, all the partners will sign. Is it clear? Okay. So letter of appointment. Then partnership documents. What are partnership documents? Very important document I asked you to learn today was minute book. Minute book, because whatever thing happening will happen in the meeting. So minute books. Okay. Minutes, which will tell you the authorization, whether in form of capital expenditure or raising loan or any kind of purchase of assets. So you will study the minutes. Okay. Then what else will you study? You will study the objects of partnership. What is the object? Why is this partnership being formed? How will you get to know that? From the partnership agreement. Okay. What important documents did we study today? Minutes, investment register, letter from donor or donor agreement, and then partnership agreement. Are you able to recall these things, dear students? These are the important documents. See, if you remember these documents, you will be able to write. You will have a way to start your answer. You will have something to write to begin with. Okay? Then the books of accounts. Books of accounts, examining whether the books of accounts are reasonable and considered adequate in the nature of business of partnership. Are the books reasonable? Is it adequate to maintain these accounts? Big business maintaining such small balance sheet and small PL. Why are all the items not shown in the PL? Are all the assets not shown? Okay. Then mutual interest. What do you mean by mutual interest? That there is no violation of a provision of partnership agreement. Anything which is mentioned in the partnership agreement or partnership deed has been duly complied with and it is not violated. Next, division for profit. What do you do before division? You make a provision for taxation, isn't it? Remember your appropriation account? Before dividing the profits, you make a provision for taxation. So confirming that provision for a firm's tax payable by the partners has been made. This is what you have to see. Okay. So what are you confirming? That a provision for firm's tax payable by the partnership firm has been made before arriving at the amount of profit divisible among the partners. So this is what you do before dividing the profit. You make a provision for taxation. And last is division of profit. Is it as per the PSR or profit sharing ratio mentioned in your partnership agreement or not? Are you understanding, dear students? So again, what are the matters that you need to give special consideration to? Letter of appointment, that is your engagement letter. Partnership documents, minutes of the meeting. Objects of the partnership, where will you get it from? The partnership deed or agreement. Books of accounts, are they reasonable and adequate? Mutual interest, are they not violating any of the provisions mentioned in the partnership deed? Provision for taxation, is it made before dividing the profit? And the division of profit, is it actually divided in the profit sharing ratio mentioned in the profit partnership agreement or not? Is it okay to you, dear students? Come on, my dear students, tell me, is it okay? Did you understand? Were you able to relate? Okay, very good. Okay, can we take a short break for 5 to 6 minutes and then come back and start with our next topic, that is LLP. So what have been done before the break? We have done NGO. We have done, what else did we do? We have done sole proprietor and we have done partnership. Okay, is it clear? A technical team? Technical team, are you here? All right, we are taking a short break. It is 7:19 and we will come back at 7:26. Is that fine to all of you? All right. Gayatri is asking me, is audit for partnership firm mandatory? No, Gayatri, there is a threshold limit prescribed under the Income Tax Act. If your turnover or your gross receipts doesn't exceed that amount, you need not to get your books of accounts audited. If it exceeds that threshold limit, you have to get your books audited. Okay, so it all depends upon the threshold limit prescribed under the Income Tax Act. Is it okay, Gayatri? Gayatri, is it okay? Did you get the answer? Okay, all right. Now, coming to our next topic, that is LLP, Limited Liability Partnership. Now, as the name suggests, limited liability and also partnership. You all know that the liability of a partner in a partnership firm is unlimited. But this LLP is formed with the concept of combining the advantages of both company as well as partnership. So here you have the partners have a limited liability like that in case of a company. Okay, so it is a mixture of your company as well as partnership, giving the best of both worlds. Isn't it? The advantages of both company as well as partnership form of organization. So here what is the criteria again? There should be minimum 2 partners like that in a partnership firm. Okay, and then they can form LLP, and at least 2 partners should be a designated partners. Now, who would be a designated partner? A designated partner is an individual. Okay, minimum 2 you need. Suppose they are 4 in number, because the minimum requirement is minimum 2 partners. It could be 3, 4, 5, 6 on. So they say minimum there should be 2 designated partners. What are their criteria? They should be individuals. Number 1. Then they are the people who manage the operations of the business. Okay, and they ensure the compliance with the legal and regulatory requirements. So those we call at designated partners. So they say there should be at least 2 partners who should be designated partners, and these designated partners should require DPIN, that is designated partner identification number. Like you have DIN, direct identification number, same is here in LLP, designated partner identification number. Okay, again there's a criteria that one of the designated partners should be a resident of India, but then you need not to get into so much of detail. Just remember that who's a designated partner and there should be 2 designated partner, and they should be having designated partner identification number, that is DPIN. Okay, now this partners in LLP and their rights and duties are governed by way of agreement between them. Okay, and LLP is governed by LLP Act 2008, Limited Partnership Act 2008. Okay, now they have given a small definition of small limited liability partnership. They say, what is a small limited liability partnership? They say where the contribution, what is contribution? The capital or investment made by the partners does not exceeds 25 lakh rupees. Okay, and there's an upper limit that they have prescribed, that is 5 crores. Okay, but for your sake you remember 25 lakhs rupees. Okay, where the investment by the partners or contribution by them does not exceed 25 rupees, and plus the turnover of that immediately preceding financial year, the turnover of that LLP in the immediately preceding financial year does not exceed 40 lakhs, and here the threshold limit or the upper limit is 50 crores. Okay, you can remember 25 lakhs and 40 lakhs. 20 lakhs, 25 lakhs for contribution, that is investment by the partners, and 40 lakhs in with respect to the turnover in the immediately preceding financial year. Okay, is it clear to you? So this is a definition of small limited liability partnership. Next, they say LLPs are required to maintain books of account, which shall contain what? Their particulars of money received, their records of assets and liabilities, their statement with respect to inventories, goods purchases, work in progress, finished goods, COGS, that cost of goods sold, and any other particulars that the partners may decide. So they have to maintain a books of accounts. There, what have they to mention? They have to mention about the particulars of sum received and spended. Okay, received and expended. Record of what? Asset and liability. Basically, what is they maintaining? Income, expenditure, asset, liability, profit and loss and balance sheet. So you are writing sum received and expended. Assets and liabilities, the records of assets and liability. Statement of, again, what statement? All the expenses that you have made, cost of goods purchased, inventories, work in progress, finished goods and your COGS. All your costing items. That statement. And other particular with the partners may decide among themselves. So 4 things they are required to maintain in the books of accounts. What are there? Particulars of sum received and expended, record of asset and liability, statement of the costing things, cost of goods purchased, inventories, WIP, finished goods and COGS, and any other particulars that the partners may decide. Come on, tell me, what are the particulars that the LLP are required to maintain in the books of accounts? I want the answer. What are the statements or what are the statements that the LLP are required to maintain in the books of accounts? Come on, quickly, I want the answer. 4 things we have just discussed. Who will write to me in the chat box? Let me see. Nobody is writing? Should I repeat for you again? LLPs are required to maintain their books of accounts. What shall it contain? What should it contain? Sum of money received and expended, records of assets and liabilities, statement of cost of goods purchased, work in progress, inventories, COGS, isn't it? And other particulars at the very good, very good. Oh, the answer came late to me, but yes, it did come. All right, okay. So these are the things that the books of accounts of an LLP should have. Now, important is your audit of accounts of LLP. Very simple. They say every LLP, okay, it provides that the LLP whose turnover does not exceed 40 lakhs and the contribution does not exceed 25 lakhs. The same criteria that was mentioned for small limited liability partnership. Isn't it? Turnover not exceeding in any financial year 40 lakhs or whose contribution does not exceed 25 lakhs is not required to get its accounts audited. Means small LLP, the turnover is less than 40 lakh, contribution less than 20 lakh, need not to get it audited. However, still, if the partners of such small limited liability partnership decide to get their accounts audited, the account shall be audited in accordance with the rule. No issues. Okay. Again, what are the advantages? What are the advantages? See, even if you write your partnership advantages points, it would be okay. Because number 1, reliable. Disputes, isn't it? Detection of fraud, of error or frauds, isn't it? This is why you are detecting. Detection of errors, isn't it? Error would be a right term because fraud, again, it will lead to that you are checking for investigation. Okay, so you are detecting frauds and errors and verification of financial statements. Same, there you are checking is it true and fair. Then better compliance and management. You are see that periodical visits and suggestions by the auditor will help in improving the management of the LLP. For voluntarily, you are saying, auditor, please advise me how to go about this, how to maintain my books of accounts. Is my books of accounts representing true and fair view? And reconstitution. What did we study there? Change in partnership, admission and dissolution. Same thing is here. Reconstitution they have written. For settling accounts between partners at the time of admission, death, retirement, insolvency, insanity. This is what we had done in the previous advantages. Are you all understanding, dear students? Number 1, reliability. Then dispute. When will the dispute come? In case of either admission and dissolution, here they have given one term, reconstitution. That is change in the partnership. Isn't it? And then detection of error and better compliance and management. Is it easy for you to understand, dear students? Are you able to retain? Are you able to relate? Yes. Why? Because you have understood it earlier. See, in this chapter also, if like I tell you that these are the important documents, if you keep in mind, you will see in the later part of the chapter when you get to study about other entities, those points will help you to relate, to introspect into that entity more. Okay, so just be with me, stay with me, and study with me. Okay, and also learn with me. Hope I'm making you learn in the class a little what you can do at home. I'm making your work a little easier. If yes, please write to me in the chat box. If I'm making your work a little easier, please write to me in the chat box. I will be happy to know that. And if not, then also please write that, ma'am, not understanding. Please write. Waiting for your replies, dear students. See, I'm trying to make this chapter or this subject a little peppy for you so that you take interest. Am I able to do a little good to you? Am I able to make you? Okay. All right. Okay. Thank God. Okay. All right. Then, returns to be maintained and filed by LLP. These were the accounts, or you can say advantages or purpose, or why do you need the books of accounts to be audited. Any of these questions could come. Okay. Next, returns to be maintained and filed by LLP. Now, annual return and statement of accounts and solvency. There are two returns. Okay, annual return. Every LLP is required to file annual return in Form 11. Now, this form number you have to remember. Form 11 with ROC. Within Form 11, 60 days. Repeat with me. Form 11, 60 days. Form 11 within 60 days. Not 60 days, within 60 days of closure of financial year. Like I told you, 31st March ending, within 60 days, 30th May. So the annual return will be available for public inspection. If the public wishes to view the statement, annual return, they have to give a prescribed payment to the registrar. They have to pay a fee and then can they inspect. So annual return in Form 11 within 60 days to be filed with ROC. 50 days from the 60 days from the closure of the financial year. So number 1 document, what was it? The return, annual return. What two things you have to remember? Form 11 with ROC within 60 days from the closure of financial year. Number 2, every LLP is required to submit statement of accounts and solvency. Is the partner capable of continuing as a partner? Is he solvent? Statement of account, is he maintaining a minimum balance or is he bankrupt? Isn't it? Statement of account and solvency. Solvency in Form 8, which shall be filed within a period of 30 days from the end of 6 months. They could have written 7 months. Isn't it? 30 days from the end of 6 months is 7 months. They could have written 7 months, but no. You also have to remember this way. 30 days from the end of 6 months, the financial year to which the statement of accounts and solvency relate to. That comes to 30th October. 31st March, April, May, June, July, August, September, October. 30th October, you can write there. So basically 7 months. But then the way of talking, it's a legal term, so you can't skip that. Even you will learn the same way. 30 days from the end of 6 months. Solvency, form number 8. Form 8. Their annual return, Form 11, within 60 days. Year, 30 days from the end of 6 months. So this could be asked in your exam. Important returns to be maintained and filed. Number one, annual return, right there. Annual return form 11, 60 days from the end of the financial, within 60 days from the end of the relevant financial year or closure of financial year. Then statement of accounts and solvency in form 8 within 30 days from the end of 6 months. Is it clear, dear students? Two forms: annual return, statement of accounts and solvency. Are these 2 points clear to all of you? Okay, very good. Now coming to appointment of auditor. They say the auditor may be appointed by designated partners. I told you who designated partners are, who look to the and manage the day-to-day operations of the business and ensure compliance with legal and regulatory requirements. Okay, so they are the designated partner and they will appoint. But in case designated partner fail to appoint, can the other partners appoint? Yes. Yes. So they will appoint at any time for the first financial year, but before the end of first financial year. So these designated partner, they will appoint the auditor at any time for the first financial year when they are carrying the business, but before the end of that financial year. Okay. Then for subsequent period, at least 30 days prior to the end of each financial year. For subsequent years, at least 30 days prior to the end of each financial year. Okay, other than the first year. Then they will also fill the casual vacancy in the office or to fill casual vacancy caused by removal of auditor. There could be two ways, no? Casual vacancy, voluntary taking, and then casual vacancy because they have removed the auditor. Okay, so both of them will be also appointed by the designated partner. So four things mentioned for the first year. For the first year, any time before the end of financial year. For subsequent year, 30 days prior to the end of the financial year. Casual vacancy in the office of auditor or casual vacancy caused by removal of auditor. And there they say, if any partner, the partners may appoint the auditors if the designated partners fail to appoint them. Anyone, any doubts? See, this is a law. There is no concept involved here. What is law is law. How is it said? The way it is said, the way you have to narrate and write. So there is no concept involved here. All I can do for you is to make you learn, to make you understand. But if you say there's some logic to it, no, there's no logic to it. Okay, obviously this makes sense that for the first year, before the end of financial year only, after the year, the year will lapse. Okay, and then for subsequent year, at least 30 days prior to the end of the financial year. Okay, is it fine, dear students? Is it fine, dear students? Did you understand this? Is it clear to everyone? Four things. What did we study? Appointed by designated partner. Anytime for the first financial year, anytime before the end of the financial year. Subsequent year, at least 30 days from the end of financial year. Then 2 points for casual vacancy in the office or caused by removal of auditor. Is it clear, dear students? I'm waiting for your reply. Will not proceed? Okay. Now, coming to auditor's duty regarding the audit of LLP. What did auditor used to see there in partnership firm? Engagement letter, minutes of the book, partnership agreement, isn't it? Partnership agreement for any violation, here LLP agreement. And in LLP agreement, what will be the things that was mentioned there? Name and style of business, the way the business is conducted, amount of capital contributed, interest given to the partners, duration of partnership, drawings allowed, payment made to the partners, borrowings by the partners, rights and duties of the partners, methods of settlement of accounts. Okay, any loans advanced by the partners and profit sharing ratio. Isn't it same as partnership? So for one, you learn for the partnership and that will go on for LLP as well. The same will hold good for LLP. Is it clear? See, I told you engagement letter, important document, minute of the book, important document, partnership agreement. Here, LLP agreement. Engagement letter, minute book. Okay? All right. One another important document add to your list, engagement letter. So how many documents have we done? Come on, who will write me the documents? Important documents that I have made you remember today. Let me see who will tell me the documents, important documents. Let me see who writes to me. Okay. Then comes the reporting part. Reporting. The auditor should mention when the records of the firm appear to be correct and reliable, whether he was able to obtain all the information and explanation necessary for his work, there was no limitation on the scope of work, and the next point stands good, whether any restriction was imposed upon him, limitation on the scope of audit. Okay, so he will report the same thing as it was mentioned in the partnership. Records appear to be correct and reliable. He was able to obtain all information and explanation necessary for his work, and there was no limitation on the scope, that is restriction imposed on him. Come on, I wanted the answer for the important documents that I have told you. Investment register, letter of donor or donor agreement, partnership deed, minutes of the meeting, engagement letter. Very, very good. Very good. Who all is learning up with us? Come on, raise your hands if you are learning in the class. If you are learning with me. Partnership deed, minutes, LLP agreement. Okay, minutes, donor agreement, investment register. Very good. Very good. Very, very good. All very good. So proud of all of you. So proud of my dear students. It's a great sign that you are remembering things. See, it is all about how awake you are. Okay? All right. Come on. Coming to our next topic. Are all of you ready for this? Charitable institution? Are all of you ready for the charitable institution? Should we start? You want to have a sip of water? Please have. Okay. So we begin with audit of charity. So what all have we done? What all have been done? NGO, sole trader, partnership, LLP. See, today some small topics and so much fun, isn't it? Again, charitable institution is going to be a fun. Should we begin? All right. Now, in case of charitable institution, now let me tell you what charitable institution, motive of charitable institution is again working for welfare. So, ma'am, what is the difference? See, NGO is independent of government, non-government organization. Charity, it has to be registered with the government. Okay. This NGO, it need or need not to require special legal status. Okay. If it is registered, it will get the benefit of or benefit and exemptions. But if not necessary. But for charitable institution, it must be registered under 12A. Okay, only then will you get the benefit again. Otherwise, you will lose. Okay, it will. What benefit does it get? That tax advantage, for example, 80G and all, isn't it? All right. So, charitable institution again, they work for welfare. Now, in case of audit of charitable institution, attention should be paid to the following matters. There are some general matters. What are the matters? Constitution. Again, this is what we studied there. That it could be in a form of NGO, it could be in a form of society or trust or Section 8 company. Isn't it? This is what we studied. Here again, constitution, is it a firm, is it an LLP or is it a Section 8 company? Okay. Then you see to the operation and legal framework. How is it managed? In what manner is it managed? How is it set up? Is it set up under the Companies Act as Section 8 company? Then again examining the internal system, internal control system. You verify, you see to the accounting of amounts collected. Whatever amount they have collected, See, do you know registration under 12A? You get yourself registered at charitable trust, okay? And then whatever funds you get, you are expected to utilize 85% of that. You are expected to utilize, see, listen, if you understand, well and good. If you don't understand, you can ask, but not for you to, you must have studied charitable trust in your income tax or you will be studying in your finals. Okay, so 85% of that you should utilize. If you have utilized that, if you have applied, they say apply 85%. If you have applied, well and good. You will be getting all the benefits. All right. So this is what they say. You have to see that whatever amount has been collected, is it utilized in that manner? Then verifying in details the income and confirming the amounts received have been deposited in the bank means correct amount, correct account has it been transferred to, and the correct period. It is not that you received that money last year and now you are showing it in your bank account. No. So correct amount, correct account, and correct period. All right. Then you examine the trust deed or regulations laid down. What are trust deed here? Trust is like an MOA, memorandum. It is like what object is. Okay, regulation. What is the objective of this charitable trust? For example, the objective of this charitable trust is, it is formed for educational purpose, for health purpose. Okay, and is the objective obtained, achieved or not? Suppose you are working for education or healthcare. Okay, and the money you are taking is for some other purpose. Is it acceptable? No, not at all. Are you understanding? So this is what they try to say, that whether the objective is achieved or not. So these are the general documents. Then subscription and donation, again, how will they get money? How will they spend money? Okay, so they get money in the form of subscription and donation. You have to see if any changes made in the amount of annual or life membership. If yes, you have to mention that. Okay, subscription, adjustments, any changes in the amount. What is it? You have to see to it. Then whether official receipts, the receipts which have been obtained, are they used or are they unused? If it is unused, then adequate control is imposed over the unused receipts books. Okay, and then if it is used, check for that. Obtain all the receipts book and the period covering under review. You have to reconcile that these are the receipts received in this period. Is it reconciling? You have to reconcile the same. Then you test check the counterfoils with the cash books. Okay, any cancelled receipts, you give a special attention to it, that this receipt received but it has been cancelled. So again, it should reflect there. Are you understanding this? Firstly, what did we study? We studied, you will know about the constitution, whether it is a firm, LLP or a Section 8 company. Then the operational and legal book. Under what act is it? Under what act it is enacting. Then system of internal control system. Then the amount collected. Is it, you have to verify, is it in the correct amount? Reflecting the correct amount? The correct account is reflecting, is it reflecting the correct period? And it is properly deposited in the bank account, regularly. Then you examine the trustee. When it comes to subscription, you see whether it is an annual or life membership. Then you see to the official receipts. Adequate control over the unused receipt books, and then reconcile the receipt books covering period under review. And then you have to test check the counterfoils, okay, with the cash book. Then you obtain a print list of subscription and donations and agreeing with them the total collection. You get the printed book. Oh, this is the collection. Collection. This is in the account. Prescription. This, is it agreeing with the actual collection? It says this much is collected. Is it actually collected in the, whatever is shown, is it tallying with the amount actually collected? This is what you have to verify. Okay. Then you examine again the system of control exercised over the collection and the steps taken to ensure that collections have been duly accounted for. Then you verify whether total subscription and donations received with any figures published in the reports. For example, your report says you have published this somewhere that this much statistical data, that this much amount was raised. You see whether it is tallying with that report or not. Okay, then comes the legacies. What is legacies? When somebody gives things to charity, some amount of property they give, they write in the will that I want to give it for charity. For example, some people, they say that this home, I don't own any children, I would like to donate it and I would like it to be used as a charity. Okay, so that is called legacy. So you have to verify the amount received by reference to correspondence, means documentation and accurate recording of whatever, whatever figures are available with the information. Whatever is mentioned there in the will is the same amount received. Okay, then grants. Okay, again, in someone will they try to say that I want to give this as grant. So vouching the amount received with the relevant correspondence receipts and minutes book. Again, you see, why minutes book? Because it was the resultant of the meeting. It was the outcome of whatever happened in the meeting. Okay, some grant received, you will vouch for the amount received. Legacies are somebody is writing in the will and saying that this much property I want to give. So you verify with that correspondence that this document says this much, has this much been received or not. Grants, you verify with the correspondence and minutes book. Again, you say, oh, minute book says this much has been received, but is it actually the amount received? Okay, you obtain a certificate from responsible of grant receipt. Whatever grant is received, you obtain a certificate for it because that acts as your written representation that you have obtained. Okay, so what things did we do? We did for the subscription. In subscription, we studied about the annual or life membership, then official receipt, unused adequate control, and then for you reconcile the receipts with the period under review. You test check the counterfoils, and then you obtain the print list of subscription and donation and agreeing with them the total collection. Then you also see to the system of control exercises over collections. Okay, and then we talked of legacy. Legacy, how will you verify? The correspondence and other information available. Grants, how will you verify? With the correspondence and minute book, and also obtain certificate. Is it good? Is it good? Is it good? Can we proceed, dear students? Okay. Then coming to investment income. Now, investment income, tell me, what will we see to? Interest and dividend, we will verify with the investment register. Okay, so vouching the amount received with the dividend and interest counterfoils. Checking the calculation of interest received and scrutiny securities bearing fixed rate of interest. Okay, if any, okay, in case of dividend, there is a dividend receipt given by the financial institution or by the companies. What happens? This dividend receipt, it carries an, just listen, it is not for that importance from the exam point of view, but you should be knowing what does a dividend receipt stand for. A dividend receipt, it bears an electronic credit advice given by the company or the bank or financial institution, whatever it is. What did I say? Electronic credit advice, that there is a number which identifies and which acknowledges that yes, dividend has been received. Electronic credit advice. Okay, so this, why, what purpose does it serve? It confirms that the funds have been deposited in your accounts. It confirms with a dividend receipt. It has an electronic credit advice given, and that confirms that that fund has been deposited to your account. All right. Then you check for the calculations. Interest received on secure. How will you check for the fixed rate of interest? For example, if TDS was deducted, okay, you have applied your 85% and there is a zero taxability, then what will happen? You will claim for the refund of your TDS. Okay, you will claim for the refund of your TDS. All right. So this is what you have to check. Then you check for the appropriate dividend has been received and whether any investment has been sold ex-dividend. What do you mean by ex-dividend? For example, market price is 110. Okay, and you have sold it for 100 rupees. What is the amount of dividend? That 10 rupees. Or you have purchased it come dividend. Come dividend means including the dividend. Market price 110, purchase it for 110. So all these ex dividend and come dividend you have to check for. And then comparing the amounts of dividend received with a schedule of investment, or you can also say investment register, making special inquiries into any investment held for which no dividend has been received. You see, for this investment, no dividend received, what is the matter? Have you sold it, not disclosed? What is the matter? Okay, so for investment income, exclusive question could be asked with respect to investment income of charitable trust. So investment, one thing should click to you, interest and dividend, two things will be talked of, where investment register will be vouched for. Dividend and interest counterfoils will be vouched for. Calculation, the amount of interest will be vouched for. Checking appropriate dividend for ex-dividend and cum dividend in case of purchase, ex-dividend in case of selling. Then comparing the schedule of investment, or you can say, you can also write investment register. Is it clear to all of you? Investment income, it might come. Is investment register clear to all of you? Okay, now we come to rent. Okay, rent. Suppose it is getting some rent. You examine for the rent roll. What is rent roll? It is nothing but the register where details of the properties, rent received or rent unpaid, whatever, all is mentioned there. Okay, so it is called the rent roll. And inspecting tenancy agreement, that is your rent agreement. Okay, tenancy agreement, note in each case the amount of rent and the due dates. So in case of rent, what are we seeing? We are seeing to the tenancy agreement where amount of rent and due date is mentioned. We also vouch the rent from rent roll. Rent roll is what? Register where the details of all the rent is mentioned. Rent roll. Okay, so here rent roll. Okay, from the counterfoil of receipt books and checking the total from the cash book. Whatever your counterfoils are telling, is it matching with the cash book or not? Is rent clear to all of you? Write to me in the chat box. Is rent clear to all of you? In rent, what do we check? Tenancy agreement, amount of rent and due date. Then we see from the rent roll and we compare the receipts book with the cash book, amount mentioned in the cash book. All right. Then coming to special function. Special function, for example, some concert, some show has happened to raise donation. Okay, then what will you check? You will check for the proceeds of all the tickets issued have been accounted. So many passes gone, have they been accounted? Has money been received after making the allowances for returns? Some could have been returned for cancelled. So just for this, you have to see that all the tickets have been issued, have been accounted after making allowances for the returns, after deducting them. Okay, then income tax refund. See, if you have applied your 85%, you will definitely get the benefit of those TDS deducted. If somebody has given you income and has deducted TDS, what will happen? What will happen? They say that if they have deducted the TDS and your taxability is coming to zero, your income is non-taxable, under the taxable limit, you can refund that, you can take the refund of that TDS. Okay, so if TDS is deducted, you will vouch for the income tax refund with the correspondence of income tax department. Okay, so in your 26 AS it has been shown, so you will claim that refund. Then checking for the calculation of repayment of claims, whatever repayment you have done, you will check for that. Now coming to expenditure. Okay, You will vouch for the payment of grants. For example, object of this charitable institution is to educate poor children. But grant has been given for planting trees. They say this is also a cause. That is also for the welfare. But the objective of the charitable institution is not that. If its objective is to educate poor children, it can only advance grant for the same purpose. If it is giving grants for any of the good purpose but not same as its objective, it will not be allowed. Are you understanding? Objective of charitable institution, I told you, is to educate poor. But grant given for planting trees, it is not accepted. You will not be allowed. Is it clear to all of you? Are you understanding this? So vouching, payment of grant. Also verify whether grants have been paid only for the charitable purpose. Charitable purpose here means the objective is same as that of this charitable institution. Purposes failing within the purview of the object for which charitable institution had been set up, and no trustees, director or member or managing committee has benefited from it, should either or be benefited either directly or indirectly. Means they have given grants and any of the member or trustee of the charitable institution has benefited. Are you understanding this, dear students? See, listen to me very carefully. They say it should be given for charitable purpose. Now, you say, ma'am, the purpose is to educate poor children. Fine, understood. But grant countries, ma'am, this is also a charitable purpose. Agreed, but not the holding same objective as this charitable institution. So, it will not be considered as a for the same object. Are you all understanding this? Please show me a thumbs up if it is clear to you. Never think that, ma'am, it is for again a welfare. Ma'am, it is good thing. It is also charity. But the object should be same. Grant should be given for education of poor children only in this case. Is it clear to everyone? Please respond to me in the chat box. Very good. So this one question can, come and trick you. And you will not be tricked. I know that. Great children. Okay. Then what do? You verify the schedules of securities held as well as inventory. You have verified general expenses. Now come to verify assets also. Assets, you will verify the securities held. Inventories, both movable as well as immovable. Movable, inventory. Immovable, your PPE, your land and building. By inspecting the securities and title deeds of the property. How do you verify? Conveyance deeds, sale deeds, title deeds, and by also physical verification. You go and see, okay, show me this building, show me this plant, property and equipment. Okay, so you verify, physically verify the movable properties on the test basis also. Okay, movable property also you verify. Inventory, physically count it. Okay, then what else do you verify? You verify the cash and bank payments. You ascertain any funds contributed for special purpose is utilized for that purpose. For example, again, special purposes, education of poor. Grant given for a purpose other than the subject has to be seen to. Okay. Here completes our charitable institution. Anyone, any doubt in charitable institution, please feel free to ask. I'm taking a pause for 5 minutes or maybe 2 minutes. Please ask your doubts. Is charitable trust clear to everyone? Write to me in the chat box. Okay. Can we proceed to other topic? That is audit of educational institution, schools, colleges and university. Okay. See, just remember your own school days. Your own school days. Now, they say general thing, what will you examine? Trust deed or regulation. Is it under any act of legislature or regulation formed? you have to see to the legal this thing. Trust deed regulation. Whatever is the act of legislation under which it is registered. Okay. Next, minutes of the meeting. Next, minutes of the meeting. Easy? Yes, ma'am. So general trust. See, in your partnership, you read to the partnership agreement. In your LLP, you read to the LLP agreement. In your university or college, you see to your trust deed. Okay? Are you understanding? Trust deed. Under which act? There in NGO also you used to see. Is it under trust or societies? Is it section 8? Charitable also you saw. What form of organization? Is it firm? Is it LLP? Is it section 8? Here also you will see to which act or legislature it is under. And the minutes of the meeting. Simple? Okay. Now, here also it is going to get money and it has to, this is the entire framework. Getting money, receive, expending money. Okay. Studying the framework and now studying from where is it getting the money, from where is it expending the money. So, school and college, where does it get money from? Fees. Again, fees are of two types. Your terminal fees, your annual fees, and one is your admission fee. Do you remember? One time fee, 40, 50,000, that was a big amount. First time admission, oh my god, tuition fee. You call it tuition fee. Do you remember? Your school fee, it was written in your bill book or whatever chart you had, it was written tuition fee. Or your term fee, which you had to submit quarterly or annually or half yearly, whatever way your school charged. And one was admission fee. That was one time when you enter and it is non-refundable. Do you all remember this? Do you all remember this? No, Anil Golti, there is no hard and fast rule. Okay, it can. Okay, it's saying trust deed or regulation. Okay, Anil Golti, is it clear to you? Not necessary it has to be a trust. If it is a trust school, it could be. Otherwise, not necessary. Okay, all right. So, do you remember that admission fee? Now, how will you verify these fees? They say you check the names of the students with the fee register. There is a fee register, investment register, inventory register, isn't it? Interest from investment register, inventory register. So fees, fee register. Okay, you see from the fee register for each month or term like it is collected with the respective class register. You see this class has 50 students and the fee register of this class has 30 students. Means fees for 20 students not received. This is how you will verify. So how are you verifying? From the fee register to the class register. Obviously, that many students' name which was mentioned in your class attendance register of your class teacher, those were all registered in your school. All of them paid fee. So it should tally with the fee register. Okay. Showing name of the student on the rolls. Those who have got roll number, admission number, serial number. Isn't it? You had to check. You verified it from that. Okay. And the test amount of fees charged, whatever amount was charged, and verify that there operates a system of internal check which ensures that demands against the students are properly raised, which shows that yes, the fees have been asked and received. Are you understanding? The only thing you have to remember here is there is a fee which is could be either regular or admission. How will you check? You will check it with the fee register with the respective class register. You will see the names of the register on rolls and whether fees have been charged from them. Just these things. Okay, just remember this much. Then what else will you check? You will check fee received by the comparing counterfoils. Do you remember your bill book? It had 3 pages. One taken by you, one taken by the bank or the office, one deposited with the class teacher. Do you remember? Okay, if you know the counterfoil of the, if you go and deposit some money, one is signed by the bank and returned it to you, the other kept by it. Are you able to relate now? Okay, so counterfoil of receipt, that money has been received, granted with the entries in the cash book. Same is reflected in the cash book and tracing the collection in the fee register. See, they say counterfoil says itna received. Cash book says itna received. Now check it with the fee register. Is the name of this student in the fee register mentioned? So what will it confirm? That the revenue from this source is the fee, has been duly accounted for. Students, are you able to relate counterfoil, cash book, fee register? Okay. Then you total up the various columns in the fee register of this class 1, 2, 3, 4 till class 12. Okay. You total up the various columns of the fee register for each month. Okay. And then or term, likewise, whatever is the criteria of collecting the money, and ascertain whether fees has been received in advance. So advance received, what will happen? It has to be carried forward. And opposite of advance is the arrears. Arrears that are irrecoverable. Student has left the school, he has gone out of station, the father has a transferable job transfer, so that it is irrevocable, it is irrecoverable, you cannot recover that. What has to be done? It has to be written off with a sanction of proper authority. So what will you see to? See, you will see that whatever you will take the total column, or you will verify with the fee register. Just write verify with the fee register any advance received, fee received, or any arrears. If it is advance, it has to be carried forward. Obviously, if the child has paid for 2 terms together, what will you do? In the next term, you will again ask for that money? No. For this term, we will settle, and for the next term, we will carry forward that amount. Alright. And if there is arrear, and you know the student is not going to come back. Okay, you know that the student is not going to come back. What will you do? You will write it off. Okay, then you check the admission fee. That is the one-timer fee. With the admission slip signed by the head of the institution, your principal or the dean of the college, they sign the admission fee. You check it with that. Is it the same? And the amount has been credited to capital fund. Non-recoverable amount, heavy amount it was. It is a capital fund amount. Okay, all right. Then you also see to the scholarship fee. Students who used, the meritorious students, those who scored really well, they used to get some scholarship. Studentship that you call free studentship or scholarship. You check because you will receive less money from them. Or concessions. For example, there's a staff in the school that the principal knows will not be able to bear this much fee, some kind of concession or discount has been given. Or in some school it happens that a teacher whose son or daughter is studying in the school, they have been granted with special concessions. So you check for that because that will be the amount of mismatch, some less money coming. Are you understanding? So you see that free scholarship or studentship and concessions have been granted by the person, and you check for that. Then you confirm what all happened in the school. You are not in your school proper school uniform. Saturday or Wednesday was a sports day. You had to wear your white uniform, but you went with your regular uniform. What will happen? Fine. You came late? Fine. You did not submit the library book on time? Fine. You did not wear your badge. Your nails are not trimmed. Your hair is not cut. You're not wearing proper uniform. Shoes are dirty. Fine. So you also see to the fine or late payment. Or if there is a late submission in the fee, there is a late fine to be submitted, you also check for that. Okay. Or if you have been absent for a long time but you still wish to appear for the exam, you pay some fine and then you can appear. So has it been collected, and has it been collected under proper or remitted to the proper authority, under proper authority or not? Okay. Then what all happened? There was a hostel also in the school or college. So hostel dues. What? There was some caution money or the security which used to be deposited beforehand. Do you remember that? There was some caution money which had to be collected before. And then what used to happen? Hostel dues. Is it collected on time or not? It is recovered from the students. Is it there in the accounts? Okay. And were their accounts closed and deposit? Those who have left the college now, Was the caution money refunded or it's still lying with them? Are you able to relate these things, students? Please answer to me in the chat box. Are all these things relatable? Okay. Now, coming to other grants, receipts and donation. Even the school used to receive donation, isn't it? If there is a rent place which the school has rented, they will receive rent, they will be their receipt. So that has to be checked from the rent roll. Again, write in your important notes, rent to be verified by rent roll or rent agreement. Right? Rent roll. Write in your important documents, rent from rent roll or rent agreement. Then vouch income from endowment and legacies. Again, this somebody has donated something for to the college or school. Okay, there is some investment. There is an interest or dividend coming from that investment. You inspect from the security with respect to investment. From where will you inspect or verify? From the investment register. Then verify any government or local authority grant has been received, isn't it? Then what is this? With a memo of grant, there's a grant received for distributing memo or something like that. If any expenses has been disallowed for the purpose of grant, ascertain the reason. So what you have to remember in other receipts, rent agreement, rental income, rental rules. Okay, rent rules. Then you vouch for the endowment. Hmm? Endowment. What is this endowment money for? For giving certain kind of prizes or memos. All right. And also interest and dividend received income, you check with the securities. In respect of the, you inspect the securities in respect with the securities held and you verify it with the investment register. Again, verify with the government, verify any government or grant has been received and if it is not utilized, whether it has been disallowed or not. Is this much clear to all of you? This was regarding the income. Please reply to me in the chat. Is it clear to all of you? Can we proceed? I'm waiting for your reply, dear students. All right. This was the income part. Now coming to the expenditure. Expenditure could be either in the form of capital expenditure or revenue expenditure. For expenditure, you have to see that any provident fund money which is given to the teachers or staff has been invested in the appropriate securities or not. The salary when they pay, they deduct the PF, isn't it? They pay PF. So PF, verify that provident fund money which was to the of the staff of the teachers, that teachers in the school, has it been invested in the proper securities. You vouch for the donation, that is you have given, is it meant for the specific purpose and utilized for that very purpose or not. Okay, then you vouch for the capital expenditure. For example, there is a expenditure to be made for a swimming pool to be built in the school or some canteen to be built. Okay, how will you verify the same? You will verify it with the minute book. Why? Because the same has been sanctioned during the meeting. Are you understanding? Again, minute book. See, minute book is important document. You verify so many mirch masala from there. Whatever happening, you verify from the minute book. Vouch in the usual manner all establishment expenses. These are your repair and maintenance and cleaning, such huge schools. Huge corridors. The cleaning and sweeping and mopping of the same requires huge cleaning material, isn't it? Your phenyl, your, whatever uh, soap or detergent you use to clean things. So that is all the cleaning expenses, maintenance expenses you inquire. If there is any unduly heavy expenditure under any head, why is it so? If any annual budget has been prepared for making these kind of expenses, see, excess, whatever was budgeted, is there an excess expenditure done towards it? You then see, or you see whether the excess amount has been sanctioned by the managing committee or the appropriate authority or not. And if not, you bring to their notice. Okay, and then you see that increase in salary of the staff, has it been sanctioned by the minutes by the committee? For example, some teacher's salary, it is increased. So it must have been discussed in the meeting. It must have been noted in the minutes of the meeting. Isn't it? Are you understanding? So what expenses did we listen to? It could be either revenue or capital. One, provident fund amount. Then vouch for the donation, whether it for the specific purpose and utilized for that purpose. Then capital expenditure. Is it sanctioned by a competent authority? Then establishment expenses. Any heavy expenditure done apart from budgeted? If yes, is it sanctioned by the appropriate authority? Any increase in salary? We will verify it with the minutes whether discussed in the meeting or not. That was regarding income and expenditure. Is income and expenditure clear to all so that we can come to assets and liability? I would like to complete assets and liability so that we do the next topic in the next class. You want me to take again, or we can come to assets and liability? Come on, dear students, reply. As you wish, ma'am. Is my voice clear, technical team? Technical team, is my voice clear?
Yes, ma'am.
Okay, all right. So I'm proceeding to assets and liabilities. Okay, so here, income and expenditure we have done. Now, assets and liabilities, what will you see? Are there any arrears on account of fees or the dormitories in the what you call hostels, or rents? Is there any arrear? Okay, then that has to be seen to. Then confirm that the caution money and other deposits paid by the student with respect to admission fee, have they been shown as liability or not? What if they leave? It is a liability. It is a liability. Okay, so you have to see. Then see that the investment representing endowment fund. What are endowment fund? I told you there's a money which is kept aside for distribution of prizes and mementos and things like that. Okay, have they been kept separately, and any income in excess of the prizes has been accumulated and invested along with the corpus. Whatever excess money you have got, it should be added to the corpus. Okay, then you have to ascertain that there is a proper system ordering inspection on receipts and issue of provisions like foodstuff, clothing and other equipment. Is it efficient and all the bills are duly authorized and passed before payment? For example, some kind of foodstuff provided, clothing given by the school. So you have to see whether proper inspection has been on receipt or issue of provisions and all have been duly met with or not. Then what do you verify? You verify the inventory. Inventory in the school is a big task. Furniture, stationery, clothing. So, and provisions for all these things. You have to check with the inventory register. How will you check the inventory with from the inventory register or corresponding inventory of the previous year? Okay, and whatever values have been applied to various items, it should be test check. Like on a test check basis, sample basis, it should be seen. Okay, so what things did we do we assess and liability? First, arrears, then caution money, has it been shown as liability or not? Investment representing endowment fund, then system ordering inspection on receipt and issue of provisions, food stuff, all these things. Then you verify the inventory with the inventory register. Okay, then last come your compliances. What are the compliances? Confirm that refund for TDS deducted from the income tax has been claimed and recovered. Like I told you that if you have applied, if there is a, because these are exempted, educational institution, they are exempted. Okay, so if any deduction has been, tax has been deducted from your receipts, you will claim the refund from the income tax department. Okay, next you verify that the annual statement of accounts while doing so, to see that the separate statements of accounts have been provided for. This thing you have to remember. Separate accounts for poor boys fund. There is a fund for which poor students have been provided education for. Poor boys fund, there's a game fund, hostel fund, provident fund to staff, etc. So compliances, two things you have to remember with respect to TDS. TDS, that is, if any tax has been deducted, since the educational institutions are exempted, they will claim it back and recover from the payment from the income tax department. And then the other thing, you have to verify the annual statements of four things. This you have to remember, dear students: poor boys fund, games fund, hostel and provident fund to staff. What did I say? Compliances of TDS. If it is deducted, you claim the refund. Second, you verify the annual statements of account of four things. Poor boy fund. Okay, you remember it this way. There was a poor boy. Okay, he used to play games. He was there in the hostel and provident fund to staff. Will you remember it this way? There was a poor boy who used to play games, go to the hostel and a provident fund to staff. So annual statement of accounts to be checked for with regards to poor boy funds, game funds, hostel funds and provident funds to staff. Is it clear, dear students? Hospitals we will do in the next class. Is educational institution clear to all of you? Anyone, any doubt, please ask. Is educational institution, colleges, school, university clear to all of you? I'm not getting any response. What happened? Are you all tired now? Are you all tired? Did you understand? Avijit, are you not tired or you did not understand? Okay, you understood? Acha, Golti Anil is saying yeah, we are tired. Okay. So is everything clear? Yes, understood. Okay. So please today revise NGO, sole trader, partnership firm, LLP, educational institutions. Okay, is it clear? And also revise your government audit and local authority. Please don't forget it, because if you don't revise that, you will forget it for sure. So is it clear, dear students? Is there anything here you did not understand or you want me to repeat something? If today you want me to repeat, I will repeat it. If you think that ma'am, we will read it again and will let you know our doubts in the next session, you are most welcome to ask your doubts. Okay. Can we say goodbye for today then? Already, thank you. Ma'am, I'm getting general answers while studying NLP firm which are not acceptable, ma'am. I'm not understanding, Golti Anil. Ma'am, I'm getting general answers. I did not get your question, Golti. Golti, can we connect? What general answer did you get, Golti? We are using the terms of the study material. I'm making you study from the study material. I'm teaching you from the study material, Golti. Yes, this is what, see, I'm teaching you from the study material. I'm taking the terms, I'm using the terminologies of the study material. I am no way diverting from the study materials terminology, Golti Anil. See, this is why I've asked you to remember and write those important documents and important terms. Golti, if you have any doubt, please come and chat to me. Come and chat with me, Golti. Any doubt? Trick to remember. We are doing it together, learning together. Do you want some more tricks? Okay, I'll make sure that in the next class I come up with more tricks for you to remember. Okay, Golti? Okay, Golti? Okay. See, I'm not offended by any of your statements on the chat box, Golti. Okay, yes, if you have doubt, you should ask. If you have any query, you should ask. Okay. But I'm trying to make you learn the important points. Okay, I'll make sure that I get it more crisp and more shortened for you. Okay. Thank you so much for your recommendations. Ma'am, we can do a rapid fire question round from the next class. Definitely yes, Gayatri. Definitely yes. I used to, but since I was seeing that I'm getting a little low response, so my concern was that have you not understood the content? So I was more concerned about getting queries from you and you answering my questions. So definitely I used to do that and I will continue to do that. Okay, done, Gayatri. Done. Thank you so much, everyone. Thank you, technical team, for your constant support. So for today, that's all. Good night. Take care, everyone. God bless you all.
Recording stopped.